Hello, listener. Welcome back to the Rural American Surgeon Podcast. I'm your host, Dr. Randy Lehman. We are in our mini series about money, and we have gone through several topics already. We started talking about the purpose. We talked then about frugality. We talked about minimalism and why that's the upgrade. We talked about different types of investing that you can do and how you want to start making money while you sleep. And then I started sharing a little bit more about my personal journey and why I've chosen real estate as a primary vehicle. And we now are talking about tax management today. And again, I am not an accountant. I'm not an attorney. I'm telling you my story about what I've done. And I'm not telling you personally to do anything. And I strongly encourage that you talk over your tax situation with a professional. But I am going to share like some personal specific details. And I have a very special guest that's joining us on today's episode. And it is my lovely and talented wife, Brittaney. And she actually, the core component of what we're doing from a tax strategy is something called real estate professional status. And so we'll talk in detail about it. But basically, it's something that you sort of have to have a certain niche in order to be able to take advantage of. But it is very much a thing that the IRS has done to incentivize certain activities. And it is working well for us and those that are involved. So I appreciate you tuning in. And without any delay, let's get into the show. Welcome back to the Rural American Surgeon, where I'm joined by a special guest today, my wife, Brittaney Lehman. Thanks, Brittaney, for joining us.
Thanks.
So today we're talking about essentially our tax strategies. And I brought Brittaney in because she's a core part of the tax strategies that we have that we're running in our life. And so you get to a certain point, and tax management is one of the most important things. And so we employ a strategy called real estate professional status. So real estate professional status is an IRS designation, and it is a pretty powerful tax strategy for a dual income, a married couple that one person has like a real good job, like for example, being a surgeon. And then you have another spouse who wants to get after it, but didn't do all of that kind of schooling, for example. If you're a two-physician couple, it doesn't really work. If you're otherwise sort of average income, then it also doesn't really work. It might be better for you just have two working spouses. But basically, you don't have to be a realtor or have any specific license. Real estate professional status means that you are working as a real estate professional, and that is your primary job. And so that's Brittaney's primary job. Like when somebody asks what she does, she says, I do real estate. But then people are very confused because they don't know exactly what that means. So that's why I brought Brittaney onto the show to kind of tell you, the listener, like, what does that mean? What do you do when you say you do real estate? So thanks, Brittaney, for joining me. Mm-hmm. And we can start by maybe telling the listener what real estate professional status is. That being said, not an accountant, neither is she, not an attorney, neither is she. So all of, you look it up, but this is what we are actually doing in our life, and confirm anything that we say. And I'd say this should be considered to be for your entertainment purposes only. But we're advisors from this perspective. But we have our own accountant. We have our own attorneys who advise us that know our personal stuff. And just like I'm not giving you I'm an authority, and I could talk to you about the gallbladder, and you can take it to the bank, what I say. And I can stand behind it because that's my job. But I am not a lawyer or an accountant. So, but all that being said, the strategy is working very well for us, and we're using it the way the government has intended it to be used. Mm-hmm. So if you're just kind of talking in layperson's terms about real estate professional status, like what exactly is it?
Okay. So like Randy said, you don't have to be a real estate agent to actually do this. I ended up getting my license just to make it, number one, to learn more about real estate, but also to kind of have it under my belt just because of using it for tax purposes. It just makes myself feel better that I have my license. And managing our own properties, I can use that to our advantage because now I can list things or buy things, put our own offers in the state of Indiana. I manage all of our properties besides I still manage it, but we have a property management company for an apartment building that we have in another state. So reason why I'm not the property manager for that. I do everything from, and I have somebody helping me as well, do all of any type of billing, property taxes, making sure those are being paid. Insurances are staying up to date. Point of contact if there's a maintenance issue from any of our properties and things like that.
So the actual IRS designation is that you have to work 750 hours in a real estate trade or business and not work any more hours in any other type of industry or business. So you can't have a job, full-time job, and do real estate professional status. You have to be doing real estate as your job. And then you need to track it. So you need to say, these are the hours that I actually worked. And, because you can be audited for this, the IRS can say, prove that you are a real estate professional. And as long as you legitimately are, then you have nothing to worry about. But if you're, just faking it and you're not actually doing the work like Brittaney is, then you'll have issues. So the first thing is you have to have a certain amount of real estate work that has to be done in the first place. And that's where, like Brittaney getting her license, listing a few homes, selling a few things, buying things. Investor level hours do not count for real estate professional status. So if you spend time analyzing deals and buying them, you can't just say, well, I spent 700 hours doing that. That doesn't count. But, things like taking maintenance calls and doing the actual work to get it accomplished does. But you don't have to be the person doing the plumbing, right? Now, that is an easy way where a lot of people, especially if they have smaller amount of assets, can also accumulate those hours. So you can spend time managing your property, like mowing your property and doing maintenance at your property, painting, installing tile and doing different things. Whatever your business, your primary business is, would kind of determine that. But what moves the needle for us is if we buy properties, commercial properties. So our tenant is a business. That's really helpful for us and for Brittaney because the negotiations generally aren't as emotional, and things normally happen during normal business hours. That's usually when they're operational. And the dollar amount actually is big enough to move the needle for us. Because, if I was buying $100,000 houses, which I think is a great strategy for some people, $100,000, $50,000 income, $100,000 house, that's a great, deal. But when you have bigger dollar amounts of income, each property that you buy has one tax bill that needs to be paid, and it has one insurance policy that needs to be maintained and kept in force. And if you buy a $100,000 property or a $2 million property, either way, it's going to take the same amount of time to do that. So you need to buy the thing that sort of like moves the needle for you and your personal financial situation. There are some other rules with real estate professional status. And I would say the Real Estate CPA Guys is a great podcast I would point you towards. I believe they have a series, I'm not sure if it's still up, but of 4 episodes back to back to back that explains the history of real estate professional status and what you need to do in order to meet the IRS designation, because it's not just working 750 hours in real estate. You also have to be materially participating in what you're doing. And so then you have to meet a second set of, I believe it's 7 criteria, but one of which can be just that you're the primary person managing a specific property can be one. So there's easy ways basically to hit it, but you do want to make sure that you are hitting those things. And then you're going to want to have a personal accountant that will guide you on this. And if you go to a personal accountant and you say, hey, I'm thinking about doing real estate professional status, and they look at you and say, that's not really, I don't know anything about it, never heard of it. Okay, that's when you turn and run and go find somebody else and interview. And we finally found an accountant that we've had several great accountants. But it's not going to be the guy at H&R Block that's going to like walk you through this strategy. You're going to have a real accountant. You're going to have to really pay for it. And you probably need to have an attorney, and you probably need to get your attorney and your accountant together, which we finally are doing. And it's a process over time, but you have to have somebody like in your corner that can help plan and think ahead. But still, even last year, your accountant's not going to be as in the know as what you are in the know. And so I knew certain things were coming out. I was like, I'm going to be having a tax problem. And I'm like 3 months out and I'm saying, I'm going to be having a tax problem this year. And part of the issue was changing environment. So interest rates going up, but nobody wanting to sell. Everybody's still sitting on 5-year balloons for commercial real estate that are like 3.5%. Nobody wants to sell yet. So what can you buy? And we couldn't really find things to buy that fit our box. Plus, we're very busy with our business last year, and we get to the end of the year and our strategy hit, it's like, so I had to do something, and that's where we end up buying an airplane to lock in some tax savings. I mean, it is an airplane that we use for our business. You got to have more than one strategy on how you're going to be able to save and invest. So we talked about reps, and now I'm going off on a tangent like I often do. I think the listener mostly cares about what you do on a day-to-day to accomplish that, and what are the perceived positives for you doing that like as a job. And so maybe tell me what you think are the good parts about you doing reps.
Okay. So at the beginning, it was mainly doing a lot of the work ourselves, but mainly me. Doing like construction work and things like that. But then as I was getting more and more busy with that, and then getting my real estate license and actually selling homes, which wasn't my end goal, not saying that this is wrong for everybody, but I really enjoy being with my kids, especially at the time right now, their ages. And Jack wasn't quite in school yet. Charlotte just started school. And so she was gone a couple of days, but then I was away from Jack during those times. And then the last couple of years, it's changed from Jack going to school 2 days a week and Charlotte going 5 days a week. And then Jack 3 days and Charlotte still 5 days. Pretty soon they're going to be doing 5 days. So it's a little bit easier to work through the day because it's not a guilty feeling of, my kids are at home with the babysitter and I'm out working way too hard. But right now, doing real estate, professional status, just managing our own buildings. I'm at home with the kids, even in the summer. I'm able to do my work from home. I can pause at any time to take a break, to be with them. So plus sides, obviously, tax purposes really helps us out a lot. Plus, it's fun too. Meeting people. It's one of my things that I really like. I love all of our tenants.
Brittany's really good with people. So that's the thing. It may just, there's an element of knowing your own skill set and stuff. And, but if she wasn't good with people, but she was good at other things, then that might be the component that she holds close to her chest, and the other stuff she, hires out or finds other people to do. So you don't have to do every single piece of all the work in your real estate. You just have to do it as your full-time job, basically. And so there was a moment when we were in residency when
it was paralyzing for me at first.
Well, that's not what I was going to say.
It was, though, because I thought about all the responsibility and how it could actually be something that I totally hated because I knew nothing about it.
So how did you get over that?
Kind of just being pushed into it pretty much, but realizing, just learning. Once you learn your people, you have your maintenance people, you have the things that you can fix, you learn the stuff that you need to learn eventually through trial and error sometimes, but just the experience, the more that you do it, the more you run into that you've never seen before. But then the next time when that problem arises, it's no big deal.
Yeah, once you've seen it before.
Right.
Yeah, anything. I mean, I think if there's a surgeon listening to this podcast, they know how that is.
Right.
The first time you manage a complication is a lot more stressful than each additional time, for example, or even just doing the operation, not talking about complication. But basically, you're saying you adopted the Amelia Earhart method, the best way to do it is to do it.
Right.
Just do it. So that's not a bad strategy, but what I was thinking was something different than what you said. Is I remember having a conversation with you where I explained that if you did real estate professional status, the savings that you were going to bring home to our household, in order for you to bring home the same net dollar amount, you would have to go get a job making $300,000 a year, because all of that money is going to be taxed at, the higher tax brackets, and you're just going to get crushed. And so we have a team, Brittaney and I have a team, and it works this way on personal finance as well as our tax strategy. It's kind of ironic where we have one person that is me that's generally out there shaking the bushes and, like, for example, finding real estate deals. Like, you don't spend a lot of time finding real estate deals. Even going and getting the degree and doing the job and bringing in the top line revenue is pretty much my responsibility. But keeping it is your responsibility. And you almost sometimes have to keep me in line and in check about that. And you're very good at that. You're very good at helping us keep, what we accumulate. And so when we had that conversation, it was one of these weird conversations that I can distinctly remember because I saw a light bulb turn on, and it was this like fear thing. And then we had that one conversation, and ever since then, it's been, how do I figure this out? Because you realized how valuable the strategy was.
Yeah.
That's how I remember it, but maybe you.
Well, I think of the fear that I had probably, and then, but no. Yeah, that makes sense.
I just remember it. And we were residents I was a resident at that point, going through all that. And so then the nice part about it is because we were residents and we were not delaying thinking about earning and saving and investing. We were maxing out our retirement accounts. We were paying down debt. We were moonlighting. We were real estate investing and having kids and doing residency and doing about 60% more than average general surgery graduate in general surgery at Mayo Clinic. While we were hammering down in that phase of our life, we then came out July 1st, 2020 with this super deep understanding of personal finance, understanding of who we were. And we knew this moment was coming where the paycheck was coming, and we knew this is what we were going to do with it. And then day one, it was, let's find deals. Let's knock them down. Here's our written criteria for deals, and then buy and whatever. So is that how you remember that too?
Yeah.
It's pretty much happened like that. Yeah. And then that allowed us just to really make a lot of progress in a few short years. The other piece of the pie with the tax strategy is it's not just reps. So what does reps do? I guess I should have started with this. You have an active and a passive bucket for your money, okay? And your active earned income is your job, your W-2, okay? Or other job-related activities, income that you're generating from a vertical income perspective. And then you have a passive bucket, and the passive bucket is essentially horizontal income. And all real estate income is passive per se in the eyes of the IRS. And so when you buy a real estate asset, you can you depreciate that asset. The asset will not stand the way that it's standing forever without maintenance, and there is depreciation. There's not depreciation on the land, right? So there's a component of that that's broke out. So when you take that depreciation, your rental income can then be reduced by however much the depreciation is. And when you buy a typical real estate asset, it's usually over 27 and a half years. You break the total purchase price, take the land out of it. Now you just have the improvements part, which is the building itself. And you depreciate that over 27 and a half years. And then that much can be reduced against your income each year. Well, you can also take advanced depreciation, and I'll talk about that in just a second. And we do that. back in like the 80s, again, go to the real estate CPA guys. They have a really good explanation on this. But back in the early 80s and before, there were not these active and passive buckets. It was all just one. And so you could buy some real estate, depreciate it, and then sort of like shelter your income without doing what we're doing. There was basically what the politicians are generally always trying to do is try and increase their tax revenue, right? And try to pin it on the smallest amount of people so that they can give votes. What happened is they, separated those two things out because there's a perception that people are using real estate, just for the tax advantages, which we are not. We are investing in real estate because we believe in investing in real estate for the long term. I also own stocks. I've talked about this in some of the previous shows. So we have other investments besides real estate, but real estate is definitely the thing that we have the most money tied up into. And it is our strategy for achieving financial freedom is buying real estate for the long term and living off of it and having our freedom come from the rent that comes from that real estate. But anyway, it does also help you with taxes at the same time. What happened was they separated the active and passive buckets out, but there were people that were doing like what we're doing, and their primary thing that they're doing, which is what Brittaney's doing, is real estate. And they were real estate professionals. And those people got hurt by that change in the tax code. So then there was a second sort of thing that was put in place called real estate professional status, and I believe in the early 90s, to protect people from being harmed by the negative effects of the law. And so that's why we're sort of in a unique position where REPS helps us more than an average person, but it is all it's not a loophole. It's actually a part of the tax code that exists to close a loophole. And you do it this way. Now, there's certain little nuances to it. Like, for example, short-term investing, like VRBOs and Airbnbs and stuff, you actually don't have to, that can be active income. So you don't actually have to, if you're managing it yourself, you don't have to do real estate professional status to take the tax advantages of those properties. And again, like talk to your accountant about, I'm not an accountant, I'm doing my thing. And I know the little bit that I need to know to keep myself legal, and don't let the tax tail wag the investing dog either. Because if you're buying expensive stuff, that's not going to be worth what you're paying for it in a couple of years, and you have a big loan, you're going to set yourself up for a big problem. But now I want to talk about the cost segregation. Uh-huh. Do you want to talk about the cost segregation?
No, I like to listen to you.
There's also a component of, like, as good as Brittaney is at people, I have a natural draw and love for working with numbers and math and spreadsheets. And Brittaney doesn't like doing that. So again, complementary, and knowing your own strengths is going to help you out. So she doesn't really have that much to do with the cost segregation study, but you do actually understand it.
Yeah.
When you take the depreciation against 27 and a half years and just divide it out straight line, that's one way that you can do it. But if you need the depreciation now, and you've done reps, so now your active and your passive buckets are put together. So your doctor income is in this bucket. Your rental income is back in this bucket. But now the depreciation from the real estate that you bought is also in this bucket. So for example, buy $1 million property, depreciated over, 27 and a half years. What is it, $40,000 a year, something like that, roughly. You could instead do what's called a cost segregation study. This is where you hire an engineering firm or an accounting firm, some company that provides these reports for you, where they look at the building. They should be visiting the building and inspecting it, and they're breaking down the building into all of its components. Because if you come into your building right now and you put paint on the walls, right, you can expense that this year. Or if you come into the building and you put in a new door or window or HVAC unit, those things are going to be placed on different depreciation schedules over time. So, and I don't know what they are, each individual one. I rely on my accountant to tell me that. But it may be that a certain thing you buy is going to be depreciated over 10 years. Another one's going to be depreciated over 5 years, and other things even longer. What the cost segregation study does is it breaks your building down into all of those components: doors, windows, studs, electrical stuff, paint. I don't really know exactly how detailed they get on it, but they break it down like that. And they put each thing on its own depreciation schedule, which would be shorter. And then you have bonus depreciation, which came out in the 2017 Tax Cuts and Jobs Act. You can fact check me on that one too. But bonus depreciation, which was phasing out, and in 2024 was down to 40 or 60%? Can't remember. 40 or 60%. It was phasing out like 180, 60, 40, 20. I think so too, because I think we bought the plane and put 60% bonus depreciation. So anyway, the bonus depreciation means that if there was something that you could depreciate over 5 years, now you can just take it all in year one, if you'd rather. You combine the cost segregation, which lets you take a lot more of your depreciation early on, with the bonus depreciation, which means a lot of that early on depreciation you can take even sooner. And now in year one, I'll tell you how it has worked out for me, is if I buy like an industrial property, a lot of times it'll take 20% out for the value of the land. So then you're only depreciating 80% of the total purchase. And of that, I was able to get usually about 28% in depreciation in year one. Then you use 28% times 0.8 to get your total depreciation, whatever, it's maybe 23% or something like that. And then that means, so say it is 23%. You buy $1 million property. Now you can take $230,000 in depreciation in year one, and maybe your rental income was, $100,000. Now you're taking much more against your income, and then that can funnel over against your earned income, basically your W-2 or whatever. Let me summarize the components. Component number one, real estate professional status, which you have to meet the IRS designation for, which if you have a spouse that works in real estate, you can do. That allows you to combine your active and passive income into two different buckets. Strategy number two, cost segregate that asset so you can take early and bonus depreciation. Understand that it's a bit of a shell game. And in the future, you're going to have another strategy for your taxes. Otherwise, you're going to pay more taxes in the future, right? But maybe the strategy is you work less in the future. And so you don't need to shelter your income in the future, right? And it's a year-by-year basis thing. Strategy number three is bonus depreciation. So the new news with the big, beautiful bill is that 100% bonus depreciation is coming back, and it's going to continue indefinitely. That's my understanding. Talk to your accountant. But in the things that I've listened to, so it's a good series of tools. And yet at the same time, we're investing in things that even if it wasn't for the tax strategies, we would still buy. Mm-hmm. Maybe the fact that we have to pay the tax it's kind of like a kick in the pants that makes us have to close on deals, and otherwise inertia might keep us from doing so many. So in that way, the tax strategy that politicians are putting in place is actually working, because what the government wants is it wants people to invest in real estate and to maintain, because the government cannot maintain efficiently, obviously, all of the real estate that's needed to support the industrial needs and housing needs of the United States. So that's why these incentives exist in the first place, is to give an investor a reasonable return, give them a break on their taxes so that they're doing the things that the government wants you to do. The most expensive thing you can do is make a lot of money, spend a lot of money on personal spending. But if you're actually investing and growing the economy that way, then it makes sense that the government would want to support those things, which is like exactly what we're doing. And so we have written criteria. We need to buy a real estate that's a certain size. We buy in certain markets. We need a certain return. I have a way that I calculate the return, which is they basically, if you listen to Bigger Pockets, they'll tell you there's 4 different ways you make money in real estate. There's the cash flow, there's the mortgage pay down, there's depreciation and appreciation. So what that means is depreciation is all the tax advantage we just mentioned. But what ironically happens is that the real estate asset doesn't actually go down in value. It actually goes up in value. Might keep up with inflation, might beat it or whatever, but it actually appreciates over time. The other thing is you have essentially a forced savings plan, because if you use debt to invest in real estate, which you can look at the podcast on leverage and you can understand the concept between what I would consider to be debt and what would be leverage and how that actually works. And it basically, spoiler alert, has to do with the spread and the interest rate, which might be logical and obvious to some people, but it wasn't obvious and logical to me until I finally figured it out. But you have this forced savings plan of paying down a mortgage over time. And so then when you fast forward 20 years and you bought basically a cash flowing leveraged real estate asset, you took advantage of all those tax advantages throughout the year. Your mortgage is now paid off and your building's worth 3 times as much as it was, and you got all the cash flow. Like, there's no other asset that you could buy that is going to treat you like that, that's going to treat you that good. Now, you can buy wrong and you can lose your shirt and you can go bankrupt and you could, regret it. And that's what Dave Ramsey did, but if you're smart about it and you're calculated and you're careful, and you're doing your best in terms of stewardship, and a series of things doesn't stack up against you, and you buy at just the wrong time, and we have a global recession, and there's things that can happen. Is all I'm saying. I think it's more likely, like for us, that we're going to be sitting later in life, wishing like that we had bought more rather than wishing that we had bought less. My grandpa, for example, told me he's only ever regretted, the only real estate deals he's ever regretted is when he sold real estate. Right? That's coming from a 96-year-old guy now living in greatest country in the world and the greatest time period in the world too. He was born in 1929, so he only lived basically in the post-Depression era. So again, I'm not telling you what to do. I'm just entertaining you for this short period of time and telling my story. What would you say to the person that's considering real estate professional status? What would you tell them to do? Anything? Like, we've talked to several of friends and colleagues, people that I know through my mastermind and whatnot, and you've talked to several like spouses that are considering real estate professional status. And what exactly did you tell them to do?
Well, getting your real estate license helps because you're obviously teaching yourself more about real estate. And not only getting your real estate license, if you were to, just for a short amount of time like I did, I have an amazing manager who I still work under, and she is super great. And every question I have, she is just, if she doesn't even know it, she is right there with me trying to figure it out. So having a good group of people behind you, I also tell them to, like, if you have any questions, I am more than willing to talk and try to figure things out with you. I've had one of them specifically that I talk to quite a bit, and just having a connection with them. They go through some things that I haven't gone through and vice versa. So that helps. But it gets easier as you go and the calls become less sickening. Yeah,
your stomach kind of turns when you get certain calls and you're not sure how to manage the situation,
But you can always figure it out.
Yeah, so you touch on some things like your net worth is your net worth, basically.
Yes.
Your network is your net worth, however you want to say it. But the people, like, all of a sudden, you are interacting with people and getting something from them, and you're giving, and something. So you're both stronger. And I would say, extend this again to the medical analogy. Like, one of the most common things that I've heard in the podcast question about resources for the busy rural surgeon is your cell phone is your biggest resource. So the people that that you can call to help you get out of trouble. I have literally FaceTimed another surgeon from a rural hospital in the middle of an operation for help. And I have people that call me regularly that ask me questions as well. And so you need to have that network that you can trusted people that, and of course it always starts by giving, but any good relationship is give and take. So, and then the other thing I was going to say that triggered me when you were talking is just to say that you're the 5 people that you spend the most time with is a great phrase, but they don't have to be physical people that you're physically spending time with.
Right.
If you read a book, for example, if you read the Bible, Jesus can be one of the 5 people that you spend the most time with. If you listen to the Dave Ramsey show, Dave Ramsey can be one of your top 5 people if you're spending the most time with them. That can work both directions. It can work against you. If you're spending a lot of time in entertainment, or if you're on, your YouTube feed or your Facebook feed is filled with garbage,
Right.
But I would say podcasts and reading books are great ways to spend time with somebody without actually, obviously being with them. And we live in a time era where you can sort of curate who you are and who you want to be by being careful with your friends, and you can become the person you are. Obviously, I have changed a lot because I've been with you, and you've changed because you've been with me. And I would say we're generally trying to manage each other up.
Right.
Doesn't always work. It's not like rainbows and butterflies all the time, but
what?
but mostly it is. So what else would you tell the listener in parting? Is there anything else about real estate professional they need to know, or basically keep learning? Keep learning. Educate yourself. Reading, like you said, podcasts. Yeah, and then talk to your, of course, licensed professionals, your CPA and your attorney. And it's a strategy that we use, and it works well for us. And I think we're investing smart in the process and helping others. I have one little anecdotal story that I would say. Our property in Rochester, Minnesota, that we bought at the height of COVID. Yes. Okay. So we bought a 2-tenant property at the height of COVID, not knowing, it was sort of hidden from us, that the tenants were receiving rent abatement. And then right when we closed, we found that out. And one tenant was a gym, and it was a jiu-jitsu gym type thing. The other one is an autism education company. The gym was not paying as much rent per square foot because it's not built out the same. It's just like an open gym versus classrooms and stuff. And the issue is they came to each company came to us in different ways. Autism education pretty much didn't need rent abatement. They were essential. They stayed open. The gym was not. They were really struggling. I thought, well, maybe I had heard before we closed, the autism education place was really expanding. I thought maybe they would want to expand into the space, and maybe the gym could just pack up their mats for a while and go lick their wounds and then come back later. And maybe there would be a deal, for them where it would be in their best interest. So then we approached the autism education company, and they said, no, we're not interested. And I'm like, oh, geez, great. So I had to go back to the gym, and I talked to them about, here's the situation. Here's your lease terms. I have my own obligations. This is what you signed. You need to meet your obligations. And there was some component of I went in there and I sat down with them and I asked them, what are you doing with your time? Because now the pandemic had set in for a while, and there were opportunities. I mean, let me put it this way. Home Depot was hiring, okay? And everybody was hiring. People had sat around and they weren't going back to work. And it was the end of the pandemic. The opportunity abounded. And one guy's just sitting there waiting for something to happen and saying, oh, woe is me and my business. I'm like, no, not woe is me and my business. This is the time. This is the phase where go get a job and pay your rent and hang in there and gut check through this. And then you'll be better on the other side. Don't ask for more deferment, because the deferment is going to come next year. And your rent now, if it's I can't remember what it's $4,000 a month or something, in the future, how are you ever going to be able to pay this obligation? You're not going to be able to. And I sat down and I penciled out the math, and the math didn't math. I explained, is not in your best interest. Definitely not in my best interest, but it's not in your best interest either for you to continue to take the deferment. So that led to them doing some restructuring things. And it was a sincere conversation. And I talked to my grandpa, who's my business partner, about it. And that is being human. And here was my grandpa who lived through the Depression and everything. And his perspective was, you have to tell them. He lived several states away. He's not really involved, but he's my business partner in the deal. And he said, you have to tell them they have to pay their rent, but call us before they put a gun to their head. And it's a pretty traumatic statement. And Brittany's like, oh, geez, we're going to put this on a podcast. But it actually comes from a point of recognizing that's a human being. And money it's not too bad that somebody's going to like have an actual, total, the hardest thing is, the stock market crashes and people throwing themselves out of a window, there's always a solution besides that, especially now in the 21st century. And that means if somebody's doing that, they've got themselves too wrapped up in the money too. So I went and sat down with them and I explained, like, don't let things get too dire, but here is like what needs to happen for you and for us. Then the funny part is a couple months later, then an autism education company calls me and they say, hey, actually, we do want to expand. I'm like, okay, great. So then I go back to the guys at the gym and I say, hey, I've been approached. Here's the deal. And now they'd already kind of thought about it. They got themselves in a good situation. And I had a lot of clout with them because I sat down and cared about them and took the time. And I didn't just say, call them and scream at them and say, you got to pay your rent. Like I did them, help them do the math. And I went the length of the blade with them. And they were just my tenant, but I kind of treated them like a partner because, we have a relationship. Long story short, they end up moving out and like kind of paying their way out. So they saved a lot of money, but I didn't really get hurt by it. And then I got the autism education company to expand in there and I sort of brokered this deal. And there was a lot of massaging of the things and doing what needed to be done. When I was talking to Brittaney earlier, it's funny because we were talking about risk management and I said, why do you feel like I'm not actually like risky with the things that I do? And she said, you always figure out the thing that needs to be done.
In the end, you always figure out how to get it done.
Yeah.
That's how.
How to get it done.
How to get it done. You do all the things so you can get it done. Mm-hmm. You don't stop until you really know. And that's why I feel like you don't fail at a lot of things.
Yeah, just never quitting. Like it's a lot of the things that make you a successful surgeon. Like I've had situations like, here's another tangent. I'll kind of come back to the real estate thing. I had a patient that had, they were doing at-home acupuncture and she was sticking a needle into her breast and the needle broke off. And then they went to the ER. ER took an x-ray, made an incision, but then couldn't really get it. She ends up a couple days later in my office. I kind of explored through that excision, but couldn't find it. So then I went under fluoro to the operating room and it had migrated all the way to the axilla. Tiny, very fine wire. And it took me a long time to get it out, but I didn't quit and I got it. And then the CST who is working with me, who's, batty old bird that I'm really good friends with. And she says, well, good job, doctor. I think I would have quit a long time ago. And that was it, right? That's her like compliment way of, I don't actually know it was a compliment, but basically right. You don't quit. You just like got to keep moving. And if you're like sincere and honest and people can trust you and you're thinking ahead and you're working hard, you're not trying to do it all at once necessarily either. That's the other thing, like in terms of risk and everything. Not trying to get rich quick, get rich slow, but then managing things well. That's how you're going to have like, I think extreme success in anything. You probably already have had success like in your professional career, but you could have success in your money career and that sort of thing as well. So the way things turn out, the gym goes out, autism education comes in, we do this whole thing. Then we moved to Indiana and the neighbor got tired of all the traffic and he had to get trucks in and out and they were parking on the street and I guess he had actually gone to the city and requested no parking on one side of the street or something. I'm taking a little bit of a artistic license with this story here. The city had said that they were going to block the parking on that side of the street, but he went out of his way to bang in street signs that he made up, personal handwritten street signs that said no parking by police order on his side of the street, right? And then we get the really upset call from the, autism company and this and that. And you got to do something, this guy can't be doing this. They're made up signs. And so Brittaney, I'm in the river with the kids at 6 p.m. when we took this call. This is one of the rare times where we got it, but they were on Central Time. So usually we get the calls during business hours because we invest in properties that are rented to businesses. Anyway, she's on a shore and she's talking to this guy and he's like laying into her from our tenant, right? And she's trying to say, I know people at the city and I can look into this and figure out like what the deal is. But he just couldn't believe, didn't really understand, right?
Yeah, yeah.
So anyway, she's on the shore like crying by the end of this conversation.
First time I think I've ever cried. And from a tenant.
Yeah. And but anyway, the guy had actually the neighbor had a good point, right? And he's a human being too, right? And he maybe didn't do it exactly the right way. But long story short, Brittaney then makes some calls first thing the next morning. Turns out the guy had gone down to the city and there was going to be a ban on parking over there. And we made a few phone calls, got the guy on the phone, said, what do you need? Here's what we need. Here's what you need. Of course, there's room for everybody to coexist. And about by 10 o'clock the next morning, I called back to the manager of the company and I said, here is the full facts and here's what I did about it and here's how your problem is solved. And, okay. And obviously you make your money in anything solving problems. So whether you're a surgeon, whether you're a real estate investor, whatever, you make your money solving problems. And that was an example of that. And then I said, by the way, I don't know exactly how the conversation went yesterday, but with my wife, did I tell you this? Did I told him this or no?
I don't think so.
Oh, shoot. I did such a good job, kept the secret for 5 years. I said, call my wife back and apologize.
Okay. That makes sense then.
Yeah. And then I heard the next day from Brittaney, she said, hey, by the way, so-and-so called back and apologized because of how he treated me or whatever, and he's so happy.
Yeah.
And I kept that secret. I just kept that to myself. I was like, oh, that's great. I'm glad he really did that. But the funny part about that is that same guy, about 2 or 3 years later, had actually left the company, but he called my personal cell phone. And he is a quarter owner of a business with his brother and 2 other guys. And it's a boring, profitable business. And I think they're probably trying to exit to private equity at some point. And private equity doesn't want the real estate. And they own this other asset a couple states away from where we were. And he wants to convert it to a lease. And he calls me up and he says, hey, here's the deal. We want to sell our real estate, but stay in the property on a long-term lease. Would you be my landlord? No broker, off market, opportunity. This happens now to me every day. Opportunity falls in my lap. And the reason is because of integrity. So because of how I treated that guy and how he knew, and it has to do with getting the gym out. And I didn't screw the gym guys. I communicated with them. I treated them. I hear a lot of people in real estate, they say, oh, well, if you do this and that and this, then you've got them over a barrel. I hate that phrase so much. It's so disgusting. And it's like, you're not trying to stick somebody else. Everybody knows that you have to protect your interests. So I write a lot of deals where I wrote an offer on a property and it's contingent on this, this, and this. And if those things happen, then I will do this part of the bargain. But if they don't, then I'm excused from it. Everybody understands, right up front. You put it in writing and you communicate clearly the things that you need for the deal to go forward. And then there's always enough, not always, but a lot of time, if there's not enough, then the deal doesn't have to happen and it's fine. But there's usually enough food at the table for everybody to eat, everybody to get what they need if you just like put your cards out there, you know? And that's how you're going to have success long-term in life and in investing. And so then this guy calls me back, and then we end up buying the property at what I would consider are great terms with no broker and no commission, right? And we can set up things that work very well for him, and it's way easier for him than what he would have had, but it's also good for us. And then he basically has his handpick of the landlords, and he chooses us. Then a couple years after that, the company calls us and they say, hey, we have this other property in another state, and this is a listed property. Send me the link. It's vacant and it's for sale. Would you be willing to buy this and then lease it back to us? And we want to be your tenant here, but we don't want to buy the real estate. And I say, absolutely. So I write an offer contingent on getting a lease, in place with them and all the things that I need. And I get basically a great deal because I get to do a value add where I have a vacant building and then I put a tenant in, and now it's worth, more. So my returns are much higher than what they would, double digit cap rates and things like that. These deals are falling into my lap because I'm doing what I said I would do for them in other areas. And I wouldn't be able to do it without Brittaney because she's the one that ends up like pushing all the little details through. Like with that, I can manage that first start, and then she kind of took it over and got it closed. So those are sort of some thoughts that I had about the way things snowball is not always just you're getting a 20% return on your investment, and the next year you're getting a 20% on your initial principal and your 20. It's actually like a reputation snowball and an integrity snowball that kind of carries you into the next phase of your life. And if you don't start, then you lose all that snowball. And starting small, like a duplex or quadplex, renting out, doing Airbnb or something, just getting your feet wet in real estate, trying to buy something, or even just in business, like buying a business or getting involved in some way where you're trying to take your money and make it make money for you. That is a switch, which is different than just working and trading time for money. And I think it's a switch that's worthwhile for everybody to make over the course of their life. And so that's why we're bothering talking about this stuff in the first place. And maybe real estate professional status and all this stuff that I'm talking about is not for you. That's where you can go back to the episode on investing, and you can see that there's actually thousands of different options of things that you could invest in. And Warren Buffett says there's no called strikes in investing. That means that if you stand there at the plate and they throw 3 strikes at you, you're going to be out in baseball. But in investing, it's not like that. You can watch perfect pitches come right by you and wait, and you don't strike unless you swing and miss. So wait for your pitch, swing, and connect. You still have to swing at some point, right? But that's where there's no called strikes in investing. And I love that phrase. So, and then the other baseball analogy is when I was in econ class, and the professor said, tax evasion is a federal crime, but tax avoidance is as much America's pastime as cherry pie and baseball. And that's what also we're talking about is, pay obviously your taxes and report all your income, but at the same time, keep good records and have a strategy for your taxes, because once you hit, your attending salary, you have a tax problem. So, and that's how you have to have some sort of strategy, and your investing can carry you through that. We have other things besides real estate, such as the farm, which is a component where we can tailor up and down our income and our expenses. So we have a place where we can kind of do that on a year by year basis to even things out for us. The other thing is going into my own private practice. That helps you from a tax perspective, because there's expenses you can take when you're your own business that you can't take when you're a W-2 employee. So there's pros and cons of both sides of that. you weigh it out with your CPA and everything. I almost wish I could ask you guys if there were any questions and do a Q&A session, but obviously it's I'm just in your ear and you're ready to get off the treadmill. So thanks again for listening to this episode of the Rural American Surgeon. And thank you so much, Brittaney, for joining me.
Yeah, thanks.
Yeah, Brittany's like, my head's literally pounding, so would you shut up? So anyway, join us again next time on the Rural American Surgeon. And until then, dominate the day.